Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday market webcast. All right. Hope everybody had a good fourth yesterday. We got a full day today. Although I would imagine by the afternoon it's going to clear out pretty good. But we have jobs this morning at 8:30. So I'm doing this 7:45 Eastern. So we got jobs in about 45 minutes. I'll keep this short and sweet. We've been talking all week about how the market has become very comfortable trading above 5,500. Very supportive of the 20-day back on Tuesday. That's the green line here. And going back now, going on 7-8 sessions, getting towards 10 sessions of support at what ended up being the pre-FOMC price, 55.06. And the longer, over the years, the longer the bulls are able to demonstrate support at a certain area, time and again, what you've seen is once that comfort is achieved, the top end of the range is tested and that range is taken out and you head up to a higher high. Whether that's an all-time high like it is in this case or just a higher high, the chances of the bulls breaking out of that zone become better and better with every passing day down here that you can't take out support. So back here we had what's been the high for a couple of weeks, or not even, 88.75. They spiked it up into 85 on the 28th of June. On Tuesday, they took it out, printed as high as 95.75. And last night around Europe Open, they took that out 98.75. So we've got a big catalyst in 45 minutes. We'll see what that does to it. Do we start doing the dance up above 5,600? Or is 5,600 going to get a print, going to get a look, maybe fade it back, and we wait until next week to figure out what it wants to do next? Don't know. We're going to have a very big volatility event around a very big round number like 5,600. So it's, my default position in situations like this is it's going to be a price battle. Trying to decide, like we kind of did at 4,500 a little bit, although not a lot, about whether or not the market wants to be above or below that area. But the big takeaway here is technically tape is very comfortable trading above 5,500. Hourly chart, you can see a couple of things. Everything's kind of compressed because yesterday was a holiday. So, you've got a range here, 98.75 down to 85.25. This is all trade date Friday, so it's all kind of jammed in. What I'll be curious to see is if we open at 91, what does the old high, the one that was around for about 10 days at 88, what does that do? Does that become support? Because if that becomes support, then they really do have a chance to take it up above 5,600. If 5,600 holds and we start trading back below 88, well, that tends to tell me that today is not the day for this. Doesn't mean it's going to come off really hard and head down. Just means, maybe we dance around a little bit. Everybody takes a look at jobs, says, okay, fine, and, goes ahead and grabs their deck chairs and goes back out to wherever they were yesterday, which is very possible. I don't expect a heck of a lot of volume today. I don't expect a heck of a lot of anything today. I think there's more people that have the day off today than are working today. Just out in the world of, making a market and price. So we'll see. What else do we have? Volume weighted average price, 55.93. Hourly mid-band is 91.75. Proprietary moving average is also right there at 91.75. So as we head into jobs, 88 to 94 is the first area to look at, and then you take it right up to 98, which was the high from last night. And below that you got 85 and 77. So tee it up. Let's see what job says, and we'll go from there. All right. Everybody have a fantastic day, a fantastic weekend. Take care. Be safe. Trade them well. Talk to you Monday. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.